So, what's going on in the world of savings at the start of July 2025? Well, I'm going to go through some of the biggest news and product changes that we've seen, and then I'll also be covering the top savings rates in a little bit. So, let's kick off with the latest on premium bonds because they're very popular and I know lots of you love them. So, sorry to start with some bad news, but it's important for all you premium bond holders out there. National Savings and Investments have announced another cut to the prize fund rate just a few months after the last one. We've had a spate of prize rate cuts since March last year, taking us from a high of 4.65% all the way down to 3.6%. And this latest rate will apply as of the August draw. It's down from 3.8%. Now, the odds of winning will stay at 22,000 to 1, and the number of prizes available will actually increase by almost 37,000. But it's the total prize fund that's decreasing, this time by a massive £19 million. In total, the prize fund will be worth around £396.7 million, down from £411 million. This is as a result of the change in how many of each prize are now available. In reality, what we are seeing is that the number of lower value prizes increase at the expense of cuts at other levels. So while your chances of winning a prize will stay the same because the odds are staying the same, you're more likely to win one of the lower value prizes. It's not great news for premium bond savers, hopeful of winning the jackpot, and there are plenty of savings accounts that beat the new 3.6% prize rate and offer guaranteed interest. But if you are thinking of moving your money, it's best to wait until after the August draw, just in case you win something for stashing your cash in the bonds for July. And if you're not sure what to do, we cover premium bonds in more detail, including whether they're worth it, in our Premium Bond Explained article on the website. In other prize draw news, Halifax is getting rid of its Savers prize draw altogether. Now, the draw has been running since 2011, and every month there are over 1,000 cash prizes to be won. These include 3 prizes of £100,000, 100 prizes of £1,000, and 1,500 prizes of £100. Sometimes there was a super draw with high value prizes, including one of £500,000. To be eligible for the prize draw, savers need to have a minimum of £5,000 in a qualifying account for a month. So that's a Halifax or Bank of Scotland personal savings account and be registered to take part. You'll also need to be aged 18 or above and live in England, Wales, or Scotland. But you've not got long to win. Halifax has notified customers that the last prize draw will be in September, and qualifying customers will be entered into the remaining prize draws automatically. If you are a qualifying Halifax customer, make sure your contact details are up to date. And if you're looking to move your savings, do check out the top rates on our savings best buy tables. Next, you might have seen this on our socials or on the website already, but Zopa's launched a brand new regular saver that pays 7.1%. Now, this sits alongside Zopa's new Biscuit current account, which has been in beta testing for a while, and we've covered it a few times on the website. This new regular saver pays a top rate on up to £300 a month. The only one that beats it is Principality's 6-month regular saver, which offers 7.5%, although, as it might suggest, it's only for 6 months. And it's an attractive option for those who like to save small amounts each month. You'll need to open the Biscuit current account to get it, which isn't unusual with regular savers, as many of them are linked to current accounts. If you save the full amount each month into the regular saver, you could earn £137 in a year, as long as Zopa doesn't reduce the rate, which it could well do. Now, an unusual feature of this regular saver is that you can actually make withdrawals and replace the money in the same month. Usually, you can't take any money out with other providers, so this Zopa one is a bit more flexible. However, it's worth noting that you won't be able to add more than £300 to the account each month, even if you make withdrawals. So, say you take out £600 from your balance one month, you'll only be able to replace it with £300, which could hinder your earnings. Chase is also worth noting in our roundup this month, as it's offering a new 5% boosted savings account for new customers. This includes a fixed 2.25% bonus for 12 months, which won't change, and that's on top of its standard savings rate. However, the standard 2.75% rate is variable and it's linked to the Bank of England base rate. So, if the base rate falls, Chase cuts its rate, so it's 1.5 percentage points below it. You'll need to open a Chase current account first and then open a Chase saver with the boosted rate within 31 days of becoming a new customer. Now, you could get a higher rate with Santander, which pays 6%, but this is limited to balances up to £4,000. Trading 212 is also well known for offering fixed bonuses on its cash ISAs, but I wanted to let you all know that this isn't paid on ISA transfers. At the moment, its Easy Access Cash ISA pays 4.92%, including a bonus rate of 0.82%. However, if you move your ISA money from another provider to Trading 212 using the transfer process, you'll only get the standard rate. So it's definitely worth bearing in mind if you're looking at transferring your ISA cash to a new provider. And finally, it wouldn't be right not to mention the Bank of England base rate news, even if nothing actually happened at the latest meeting. After 2 cuts this year, the Bank of England base rate was held at 4.25% last month. In short, it means no immediate changes to savings or mortgage rates, but financial markets are still expecting further cuts by the end of the year. However, the Bank of England has said any changes will be gradual and careful, so a lot less aggressive than previous predictions suggested. It seems at the moment economists are divided on what could happen next. There's still a whole load of political and economic uncertainty around the world, and further escalations in the Middle East could add to that. Some experts are predicting just the 1 cut by the end of the year, taking the base rate to 4%, while others say there will actually be 2 more, taking interest rates to 3.75% by the end of the year. And there are still some who are sticking with 3 cuts, one in August, November, and December, reducing the base rate to 3.5%. So, really, anything could happen. And that's it for the news roundup today. Next, I'm going to be going through the top rates for your savings in July 2025. Now, while these are the current rates at the moment, I do want to remind you that these can change at any time, and they often do. Plus, if the base rate does get cut again at the next meeting, we can expect a flurry of reductions to savings rates. But if you want to keep on top of any rate changes, head over to becleverwithyourcash.com/savings, which me and the team update twice a day and sometimes more. We also give you a lot more options to choose from, as we include the top 4, 5, and even 6 providers for each type of account, whereas today we'll just be going through the best 1 or 2. So we're going to start off with my top current account linked pick, which has been a very consistent option in our monthly savings roundups. If you're a Be Clever with Your Cash regular, you'll be familiar with the Santander Edge Saver that pays 6% on balances up to £4,000. Now, this 6% does include a 2% bonus paid for 12 months, so after the term is over, the rate will drop. You'll need to get a Santander Edge current account to get the savings rate, and right now you can also get an £180 switching bonus with this current account. We feature this account on Be Clever with Your Cash a lot because the rate is so hard to beat. You might have seen it already in our savings roundups on the website and in our newsletter. With Santander's current account switching bonus and this high savings rate, it's definitely worth considering. Next, we've got the new one from Chase that I previously mentioned, which pays 5% when you're a new customer and open up a Chase current account, and Nationwide's Flex Direct account, which also pays 5%, but only on balances up to £1,500 for 12 months. And you'll only get this rate the very first time you open the current account. If you're a Nationwide customer already and you meet certain criteria, you could switch this account or one of the other Flex ones and get a £200 members switching bonus. Now on to ISAs. These accounts are worth looking at if you've had a Chase or Nationwide account before, or if you've got a bigger balance, or you have an ISA allowance you want to take advantage of. Currently, the best rates are paid on easy access ISAs, and we've seen a couple of providers pushing up their rates recently. But be mindful, most of the best rates are offered to new customers only. At the moment, you can get 4.92% from both Plum and Trading 212, each including a 12-month fixed bonus. So that bit won't change, but the variable rate could do whenever the provider likes. So don't bank on getting the top rate for the whole year. These are both offered to new customers, and as I said earlier, the Trading 212 bonus isn't paid on ISA transfers. But either is a decent option for an easy access ISA. If you have been a customer of these providers before, Tembo's Easy Access ISA pays a slightly lower rate of 4.65%, so I'd definitely have a look at that one. If you've already used your ISA allowance, then you might want to have a look at easy access savings accounts or limited access accounts, which restrict your withdrawals but still let you make them. The top accounts have stayed pretty static over the last few months, so you might be familiar with them already. Kahoot, the sister bank of Santander, pays a top rate of 5%, but only on balances up to £3,000. It's completely easy access, so a great option for those with smaller savings. Next, we've got Atom's Instant Saver Reward account, which offers a rate of 4.75%. However, with this one, you'll see the rate drop to 2.75% in the months where you make a withdrawal. And then we've got Snoop, which pays 4.6%, and it's a proper easy access account again, so you can make withdrawals whenever you want. Plus, the rate is paid on balances up to £85,000. So if you've got a larger balance and would prefer access to your money whenever you like, I'd go for this one. If you don't need the flexibility of an easy access account, Oak North 95-day notice account offers 4.74% when you open it via savings platform Prosper. This rate also includes a 12-month bonus, and you have to give about 3 months notice if you want to make a withdrawal, but it's a top rate, so worth considering. You can see more options at becleverwithyourcash.com/savings. If you're looking to fix your money, which could be an idea if you're worried about further base cuts, then here are the top rates for those accounts. Fixed savings accounts currently pay more than fixed ISAs, so I'm going to do them first. We've got Oxbury Bank's 6-month bond, which pays 4.74%. Synergy Bank pays 4.55% over a year, as does the 12-month bond from Marcus by Goldman Sachs. Oxbury Bank also has the top rate over 18 months at 4.45%, although if you qualify for Nationwide's member-exclusive online bond, you could get 5%. We've got more information about this on the website. Over 2 and 3 years, Synergy Bank pays 4.45%. JM Bank offers 4.4% over 4 years, and the top 5-year bond is from Birmingham Bank with a rate of 4.47%. And then if we look at the top fixed ISAs, we've got Synergy Bank paying 4.35% over a year, Marsden Building Society offering 4.3% over 2 years, back to Synergy Bank with its 3-year bond that pays 4.25%. Over 4 years, UBL pays 4%, and Close Brothers offers 4.24% over 5 years. Now, you'll notice that these top ISAs aren't beating their fixed savings equivalent, but they're still worth considering if you're looking for a new ISA this tax year. And if you're after a cash lifetime ISA, the top account pays 4.76% from Moneybox, including a fixed bonus of 1.46% for 12 months. And finally, let's finish off with regular savers. As I mentioned earlier, we've got Principality's 7.5% regular saver at the top of the tables, but it's only for 6 months. So I'd probably look elsewhere, such as Zopa's new regular saver that offers 7.1%. I've already run through the details for this one, but I also want to mention First Direct's regular saver that pays 7% and it's fixed, so it's locked in for 12 months. So if you prefer some certainty over the interest rate, this is definitely one to consider. And that's it. That is July 2025's savings update. Remember, head to becleverwithyourcash.com/savings and becleverwithyourcash.com/ISAs for the top rates, regularly updated by myself and the team. Thanks so much for watching. Check out these videos here for more ways to make the most of your money.